Good morning, ladies and gentlemen, all in crypto here, and welcome back, guys, for another YouTube video. I hope you've all started the weekend off with a bang. Let's get into the cryptocurrency market. This is going to be our daily cryptocurrency market update, and we've got lots to share with you in this video. This channel is going to take a different direction, ladies and gentlemen. We are going to start trying to really educate people, not just on the cryptocurrency markets, but markets generally. And some of you may say, but why? Well, because what's going on in other markets right now is affecting the crypto space. When we talk about interest rate hikes, when we talk about geopolitical events, when we talk about the bond markets, the debt markets, they all have a bearing on the cryptocurrency space. And why is that? Well, we have institutions involved. They are typically some of the biggest holders within the crypto space, and they play a different game to the retail holder who for the past 2 years has had nothing but sunshine, and now we're in a bit of a rut. We're in some tricky or some treacherous waters potentially. However, the bias that we've maintained is that we are cautiously optimistic moving forwards. And the reason being is because I am a huge believer in the cryptocurrency space and the direction that is going. I think blockchain is going to play a significant role in the world that we are moving towards, and that we haven't seen anything yet in terms of market cap or where this space is going. And that has me exceptionally bullish on the long term. Short to mid term, though, we're cautious given everything that's going on. I'm going to do a number of things in this video. We're going to look at Bitcoin, look at ADA quickly, look at Ethereum, just fly through them, talk about some of the things taking place within the cryptocurrency market. We'll start with the Bitcoin Fear and Greed Index, and then I want to give you guys a very sneak peek of an interview that I'm going to hopefully be releasing tomorrow with Mr. David Bell, somebody who I think has a very good understanding of everything that's going on right now, and he's talking to us about a number of things. I'm going to play a little bit of this clip. It's about an hour and a half long, so strap yourselves in tomorrow, guys. But it's well worth educating yourself. When I say this channel wants to take a different direction, I want to start making sure you guys can be the best investors you can possibly be, the most informed. And to do that, you don't just have to have knowledge on the crypto space, but markets around us, because you'll find that the answers to what's going on elsewhere often lie the answers that to what's going on within the crypto space often lie in other markets. And I want to educate you guys on that and help you guys be as successful as you possibly can. That's my promise to you. So let's get into it, guys. Markets down. Your fear and greed index is in fear. One thing that we've stressed is we don't like just how skittish the markets have been recently. It doesn't fill me with any kind of confidence. Retail sentiment is here, there, and everywhere at the moment. We're very bullish, we're very bearish, we're very bullish, we're very bearish. It's why, reiterating what I said at the start of the video, we maintain that bullish outlook for the cryptocurrency space, but understand that during certain time periods, you're going to have volatility and you're going to have ups and downs. It's how markets work, unfortunately, ladies and gentlemen. And March 2020 was still, in my opinion, probably one of the most significant events of all our lifetimes, because the markets essentially had sunshine upon them for the past 2 years. You could have essentially bought anything. And this has created a generation or a new kind of YouTube, social media, financial, side of things where people actually don't necessarily understand what they're talking about, because essentially all ships look good on calm waters. And over the past 2 years, the Fed literally flooded the system with money, so things naturally were going to make these kind of moves. And Bitcoin's move was largely amplified by that. Yes, we had the 4-year cycle theory at play and a number of other things, which have somewhat gone out the window. Of course, there is going to be an element of the halving moving forwards. But the reason I bring up March 2020, Fed had you back. Not only did they have you back, they were climbing you up the mountain, not just on crypto, but across the board. We're now at the other end of that. Almost the reckoning of that. And we now have a Fed who's sounding rather hawkish, or at least has to be seen to be rather hawkish, and are going to have to up interest rates. And it's really the question, if we look, and this clip, I'll play the rest of it tomorrow, is really talking about interest rates and, of course, the Bitcoin chart and just the effect it's already had, given the potential, the outlook for the amount of interest rate hikes that we're going to get and what that interest rate is going to be. However, it hasn't priced in potentially emergency rate hikes or more aggressive rate hikes than have initially been set out. And that could also, there's a lot going on that we're going to try and educate people on. We do have a number of things that we've been watching for. We did have that MACD bullish cross on the weekly. Every time you've had one of these, typically you've seen continuation to the upside. And it's very typical that to start that continuation off, you have a period of consolidation. In actual fact, you know, that kind of downward. If you look, you had one over here, you had one here, you know, you had one here, and then you get more continuation to the upside before or after you have that period of consolidation. So we're not actually following or kind of doing anything drastically different at the moment. Let's drop down the time frames. This is what we were looking at. We had this ascending triangle that we said you were likely to break to the upside of. You've now come back in it, which is not a good sign after we kind of pointed out that you're now potentially forming a descending triangle, and you have come and you're now back in this larger pattern. This is what you need to watch, ladies and gentlemen. You do not want to be going anywhere near below 40k, and right now you're kind of getting a bit of a structure forming and you're currently downtrending. So we need to see some kind of an invalidation of this downtrend and start making a little bit of headway. There is a very strong dollar at the moment, which of course is playing into the Bitcoin story as you look at Bitcoin against the dollar. And we've shown you the correlation on that time and time again. But right now, you know, we really want to see a bit of strength come in. And the weekend is a treacherous time because the market goes typically very low volume, which means it doesn't take a lot to move the market in one way or the other. And that's what we need to watch out for. Jump into ADA quickly. Isn't it funny that we drew this kind of $1 mark, sort of to $1.03? We're looking at reverse head and shoulders here, and we've actually come pretty perfectly down to this. When you draw these significant levels or lines of resistance or support or key levels, I should say, you know, it is they're almost like magnets. And the reason really being is because TA can often be a bit of a self-fulfilling prophecy with the fact that you have others using the same kind of and looking for the same key levels that you have. So you've seen a bid here, but it looks somewhat weak. But we are going to be doing a longer Cardano video later on, you know. The reason we bring up ADA is because it's a project we believe in. You know, same way that Ethereum is going to have a long history or life, I should say, not history, in the crypto space. I think Cardano is another one, and of course Bitcoin, and there's many out there. So Bitcoin, ADA, Ethereum actually really doesn't look bad at all. I mean, it really doesn't. And you've only just had this MACD cross for Ethereum, and we've not actually looked. I mean, typically if you do get this MACD cross, you know, you get that continuation, and that's potentially at play. But what we should probably do is look at times that we've had it back here. And even if you look, you know, back here, when you get this cross, it's typically a good sign. So we're not really worried about Ethereum at all. Lots of talk about the merge. I've been waiting for like 5 years for this merge. Not saying it's not going to happen. I would love it to happen. I still hold Ethereum. But, you know, I don't sort of pay that much attention to it anymore. I just hold. And if it happens, when it happens, it happens. Market wrap, crypto waivers as speculators lose interest. This is what I mean. You know, we've had 2 years of sunshine. Nobody wants to put in the hard work, guys. I'm hoping you do, the people that are listening to me at the other end of this microphone or the other end of the screen, because it's this time period here that made me the most money in the crypto space. Being involved here, getting burnt here, and then going, okay, you know, most people lost interest. I didn't, because I had the belief that I had that blockchain is a technological revolution, same as any other technological revolution, and that you get, you know, certainly at the beginning it's very volatile, and then when it starts to establish and get adopted, you know, you really are a beneficiary. And that, I still think we're yet to see that adoption. We're seeing more of it, but in the grand scheme of things, it's still not a massive amount. Dow Jones Climbs, 100 points Friday. Stocks post weekly losses after Fed's comments. Again, the market is moving off what the Federal Reserve is saying, and this interest rates, and what they're going to do with it or what they're not going to do. And you've got a rather hawkish Fed at the moment, so of course markets are going to act. Why do we see the correlation with the crypto space? Well, we have a lot of those same actors at play. You know, we have those. This interview that we've got coming out for you tomorrow, guys, is well worth a watch, because essentially we're talking about everything. I'll just make sure the volume is where I need it to be. We're talking about everything, and one thing that we talk about is we talk about everything. I'll let the interview sort of speak for itself tomorrow, but there's lots of great things coming tomorrow that we're going to talk about, because we're going to be talking about markets generally. I'm going to play this clip as a little teaser to what we're going to be getting into tomorrow, and then I will love and leave you.
of other people's.
Yeah.
To be fair, so I think I've kind of got away with that one. But yeah, you know, there's this real big trade-off now. I'm talking more from the Fed's perspective of shit. Do we collapse the economy collapse financial markets to try and slow this inflation? And there was something very, very important said. I think it was either at the start of March or the end of Feb. Now, Chairman Powell got in front of the Senate committee, and Senator Shelby said something alluding to, would you follow in the footsteps of Volcker, who was the chairman of the Federal Reserve during the, I think, late 70s, 80s, perhaps. I think I've got my years right there. And essentially what Volcker did was he just flattened inflation, but at the risk of, you know, hurting asset prices.
Yeah.
And in no uncertain terms, did Powell say, if you look at history, the answer to that question would be yes. So Powell is basically saying, I'm willing to flatten financial markets to be able to combat this inflation we're seeing. Now, I think it was either earlier this week, it might have been Monday or Tuesday, Lael Brainard, who is Powell's second-hand woman, basically the deputy chair, she said something to the same extent pretty much. So you've got the two top dogs at the Fed now saying that they're willing to allow financial markets to pretty much collapse to be able to combat this inflation. Now, what does that imply? Well, firstly, I've got on this chart, you can see here, Bitcoin USDT on Binance versus Eurodollar futures. Now, I'm not sure how many people are familiar with Eurodollar futures, but
we'll leave it there. I really wanted to give you just a teaser of what's coming tomorrow, an interview I'm very excited to release. And the reason that I want to start getting individuals like David, we had Francis on the show, is to try and educate you guys. Because I'm becoming more and more learning about the traditional financial world, but that's not where, I'm a crypto guy. I've been in crypto for 5 years. I've studied it. I have a very good understanding of the space. I want to bring people in that have a macro view, that understand macroeconomics and everything going on right now as it directly affects our market. And I want you guys to win. That's the most important part. And I feel like the best way for me to help individuals achieve that is essentially by educating people on what the rules of engagement are when it comes to investing, and crypto is now part of that wider investment scope. So that is really all I have for you in this video, guys. I'm going to love and leave you on that note. If you have enjoyed this content, a like is always appreciated. So is a comment, and I look forward to seeing you all in the next YouTube video. Thanks a lot for watching, ladies and gents.